Today we have Tommy Thornburg on the show. You've helped over 150,000 people do taxes and get their LLCs set up.
I love that we've been able to help entrepreneurs save more money, keep more money in their corner. The tax code is over 70,000 pages. There's so many weird little tax laws that a lot of people call loopholes. I don't love the term loopholes because they're tax laws. They're there for you to utilize. A lot of people talk negative on Amazon and Apple and Trump for paying $0 in taxes. They're just masters at utilizing that 70,000 pages.
Maybe you don't want me to ask, but I'm gonna ask anyways. Do you guys own a jet? Welcome back to another episode of the Austin Zaback Show. Today we have Tommy Thornburg on the show, and Tommy is a guy that I've really been looking forward to talking to for quite some time. A lot of you probably are familiar with the company that he's a part of. He's actually the president of this company. The company's called Prime Corporate Services, and you've helped over 150,000 people do taxes and get their LLCs set up and do all kinds of different stuff. And your partner's obviously with Steve Harward, which is a good buddy of mine. And man, I'm excited to have you on the show, and I appreciate you being here.
Yeah, of course. Thank you for having me. I'm excited as well. That 150,000 number really hits home every time I hear it. Entrepreneurship is hard, and legal and financial is even harder. And I love that we've been able to bridge that gap to be able to help entrepreneurs save more money, keep more money in their corner.
Real quick, for people who don't know what you do, Tommy, or what Prime does, walk me through all the different services that your company offers.
Yeah, absolutely. So Prime Corporate Services, founded in 2012, and since 2012, we've had the same 4 core services, and that is entity structure, LLCs, corporations, business credit development. We help entrepreneurs build separate credit profiles. We currently are getting millions of dollars a month in business credit and corporate funding. Really cool.
Wow.
We've got a full team of accountants and CPAs. We do bookkeeping, tax planning, tax filing, and then we also do estate planning as well. Trust, wills, living wills, power of attorneys. So our thought is if we can make sure that you have a solid foundation if you're just getting started, but then you protect your wealth and preserve your legacy through estate planning long term. Those are the 4 services that we've been able to help entrepreneurs with over the years.
That's so cool. And you said you started in 2012, right?
Yep.
So let's just go back in time just a little bit. Give me the 1 or 2 minute story of how you met Steve and how Prime Corporate even came to be to begin with.
Timing and luck, like a lot of things that success creates, is what happened there. So we were actually at a celebration of life. I had never met Steve Harward before, and we all went to a bar to celebrate a good buddy's brother. And Steve Harward and I ended up in his car somehow, and I jumped out and paid $3 for his parking. And when I paid the $3 for his parking, Steve was like, "Why'd you do that?" I was like, "You drove. I got a great mother. What do you mean? You drove, I paid the parking." So fast forward, it was the best trade deal of all time because then he bought me drinks all night. But we just ended up hitting it off, and I was passionate about the services that he offered. I had been self-employed prior, and I knew that entity structure and tax minimization is an area that there isn't enough education in. So this is a Saturday night. I quit, Wolf of Wall Street style, like I was Jonah Hill, obviously. And it was like, let's do this. Let's go all in. So that Monday, I rolled up to his office. He was about 4 months into starting this business, and the rest is history. I've been there ever since.
That's so cool. Yeah, we were talking before the show, right? Show me the pay stub. I quit my job right now,
Yeah.
I can envision it 100%. Steve is a great guy, and I want to dive into a bunch of different stuff with Prime, and I think it's obviously really cool. You guys have built a massive company. You're a really humble guy. Steve's a really humble guy, but there's no question about it, right? Your company's huge and a very valuable company too, right? Which I want to get into in a little while. So walk me through why you've stuck with those 4 particular services. 'Cause I'm just curious, did you have all 4 day one? Was it like, hey, here's the 4 things that we're going to provide? Or was it like, we'll do your LLC setup in the beginning and then it evolved over time and then you added a service? And then why only 4 now? There's so many things out there. You guys are like Chick-fil-A, I feel like, where it's like you just have a couple,
Yeah, it's a really good question. I mean, the one area that we've really focused on is trying to dial in all the other areas. So to answer your first part of your question, yes, it's been those 4 services since day one. And what we've spent the majority of our time focusing on is getting very familiar with all 50 states. So at this point, we actually set up entities, file taxes, and do estate plans in all 50 states. Not only is every state a little bit different, but cities, counties, licenses. So as opposed to trying to go really wide, we really tried to dial in on every state, city, and county, because now we're able to maximize for clients across the nation. As of recently, over the last year or two, what we have found is as banks are tightening up, they're wanting you to look more legitimate and more as a business owner than ever before. Banks are shutting down. The financial landscape is just changing. So we are going to incorporate domains, a little bit of website, some emails, but everything will support those 4 core services. And if anything's added, it's to get more credit. It's to save more money in taxes. But I don't see us going away from the core of our business like Chick-fil-A and focusing on entity structure, asset protection, and tax savings.
Which is awesome. Yeah. How many employees do you guys have now?
Man, currently with the Prime Corporate Services Hub, we're up around 125 or so.
Okay.
And then we have a tax company with about 150. So all in, I think we're just over 300 total employees between admin, attorneys, CPAs, consultants. We just hit over that 300 mark, which I can't believe it. When we first started, it was 4 of us, and you know this better than anyone. A lot of hard work, good timing, great relationships, and we've got a really, really awesome team.
Yeah. What does it feel like now to have almost or over 300 employees? I mean, how does that feel in the morning? Did you ever think in 2010 or 11 that, you know, the day would come a decade later where you'd have 300 people, 300 lives, 300 families that, you know, you and Steve and amongst other people in your, you know, at the top of the company and the leadership circles would be, you know, taken care of? Hey, really quick, I'm sure you already know, but I've done over 2,500 wholesale deals in my career, and me and my team consistently do anywhere from 1 to 2 wholesale deals a day. If you're looking to get better at wholesaling, or maybe you're brand new, you've never wholesaled a deal, I would actually love to coach you. I would love to mentor you, and I would love for you to be a part of our education program. All you have to do is go to www.flippinsimple.com, or you can find a link in the description down below and book a strategy session with my team to see if you would be a good fit for our coaching program. Again, this is our exact strategy and formula of how we are actually able to go out every single day and do anywhere from 1 to 2 wholesale deals a day. Nobody's talking about what we're doing, and I really look forward to coaching you and mentoring you. So again, go to www.flippinsimple.com. Now let's just go ahead and get back to the show.
It's exhausting.
Yeah.
But in a good way. I wouldn't change it for anything. One of the ways that Steve and I look at it together as we talk is like, it's not only 300 employees, it's their significant others, it's their kids, it's over 1,000 mouths that rely on what Prime Corporate Services is doing to help other entrepreneurs. And Steve Harward surprised me about 5 years ago, and he rolled out this award called the Thornburg Cares Award. And it was based off of just the care that I have for the clients that I was able to work with. And I think that we've been able to instill a really cool culture where a lot of the employees hang out together. A lot of them go out together. A lot of them are best friends. A lot of them are friends and family. And we've created this really cool culture. But what has become more challenging and more difficult is the HR stuff, the 401 now, we've got insurance now. And I want to continue to do that to reward all the hard work that goes into helping as many entrepreneurs as possible. But I can't believe it, to answer. There's some days my wife and I talk about it, and I'm like, when she comes to parties, she's like, I cannot believe how big this room of people is. So it's really rewarding. Yeah,
very, very cool. You know, talk to me about that evolution, right? Like, I think everybody watching, you know, they most likely either own a company of some sort, right? Or they eventually want to own a company. I mean, like, you know, we attract entrepreneurs to watch our stuff, right? And I'm an entrepreneur, you're an entrepreneur, everybody watching is an entrepreneur, you know, so you've done what, you know, few people do, right? On planet Earth and in the US, you know, you've built and scaled a sustainable company to the point where you're able to, you know, have that many employees and the type of infrastructure that you have. So what was the evolution of that like? I mean, from 2012, four of you, right, grinding it out to today, talk to me about some of maybe the struggles and were there any hard times? Like, were there times where you doubted yourself or you guys all looked at each other and you're like, what are we doing? Or was it just a linear, all the way up?
I know you know the answer to that question.
Yeah.
Nothing is linear all the way up. Everything has got seasons. And what I mean by those seasons, what's really interesting for our business model specifically, and I don't know if you can relate with this with some of the real estate, but we sell services year round that have deadlines. So when you have tax services and you're providing support to clients that you have to file on March 15th, April 15th, September 15th, or October 15th, those are 4 days that mean a lot. So what I would say is about 6 years ago, we brought on a gentleman named Darren Janes. He's our COO, and he implemented Salesforce, CRMs, systems, and processes into our entire organization. We have never been the same for the better since. Wow. The problems are different. They're oftentimes much larger and they take forever. I love Darren, but man, those problems take forever. And I wish in hindsight that we focused more on systems and processes than we did sales, than we did the other areas of the business that are important. Everyone focuses on income. Everyone focuses on content. But what are the systems and the processes that if tomorrow you had to go 10x your business, you could do it through automation systems and processes? Without Darren Janes 6 years ago, without us buying into that and making a very large investment into the corporation, there's no way we are where we are today.
Yeah, I love that you bring that up. Let's talk about that a little bit more. You hear some big names in the industry and other industries talk about sales cures all, right? Like just sell more, sell more, sell more. But, at the end of the day, if you don't have systems, processes, and people to clean up the mess, if you will, once you make it, right, on the front end, then it's not sustainable. I mean, like, talk to me about that and maybe elaborate a little bit on that for an entrepreneur watching. I think a lot of people in the beginning, they make this huge mess, right? Like they go out and they get a bunch of clients or they whatever, and their fulfillment's not any good. The back end's not any good. They're dropping the ball. Their customer service is not any good. Like, and we see it all the time, right? Like you can go order a product from Amazon right now and, half the time it's like you can't get help. Like the product shows up. It doesn't even look anything like the photos, right? And so how do you solve that as an entrepreneur? Like at what point in the journey, you said you did it 6 years ago. You started in 2012, so what would that have been? 2017, 18 when you brought him on?
Yeah, 17, I believe.
It's about 5 years in. What were you doing previous to that? And like, would you have done it any differently?
Steve jokes that before that we were using Post-it notes. I absolutely would have done things differently in the sense of investing more money earlier in systems and processes. But 5, 6, 7 years ago, we were at 50 employees. I thought that was the cap. I remember having a conversation saying, I don't know if I want to get any bigger than this because this is starting to become more challenging to balance all of these different personalities. But what is most important is care. And sales does solve everything if the money is being placed back into the right areas. And that's where I think that we really changed the landscape of our business. We were willing to take the money that was generated from the sales and invest it back into the business. We lived very below everyone's means. We made sure that we reinvested back into the business. And as opposed to we have sales, let's just stick this in a hole. Let's reinvest it back into the systems and back into the processes. We take a lot of pride in our reviews. We have over 3,000 Google reviews at a 4.9 rating. We've got an A+ with the BBB. We've got a better score than the BBB does.
Wow.
But I say that because filing taxes is hard. It's like herding cats. You don't like filing your taxes. You probably wait until last minute. I don't know about you, but a lot of you watching, taxes are not fun. So a lot of that money is going back into how we can get people to upload their information, what we can do to get people to be proactive as opposed to reactive on topics that aren't overly exciting like taxes to save tens of thousands of dollars in taxes. Because if I teach you right now how to save $100,000 in taxes through oil and gas, Augusta rule, cost seg studies, you're going to implement that and do it every year, compound your wealth, and generate more money because of it.
Let's talk about that a little bit. Yeah, let's go down that rabbit hole, and then we'll circle back and talk about the different things. So let's talk about taxes, right? Entrepreneurs, I don't know about you. Maybe it's just me, but I've screwed up my taxes royally in my life, right? I've been an entrepreneur since 2013-ish, right? And there's been many years where I've overpaid. There's been years where I've paid late. There's been years where I've, had to do extensions. I just probably in the last couple of years have started to get better at actually figuring it all out, right? And doing it on time and paying the, what I need to pay and everything like that. But it took a long time because we're not taught any of this crap.
Yep.
Like, you go and you decide one day, hey, I'm going to be like, for me, I didn't go to college, but I just became an entrepreneur and I scaled pretty big companies because I'm good at all the front end crap, right? But I'm terrible at the back end stuff, So where do you see most people making the mistakes when it comes to their taxes? And you mentioned a few, but maybe you can elaborate on that. Hey there, real quick. I'm not sure if you've ever heard of a company called Prime Corporate Services, but they're a company that helped me with so many different things in my business. I'm just going to mention a couple and we'll get right back to the tour. But I myself am an entrepreneur, probably just like you, and I am really good at what I'm really good at, and I am not good at what I'm not good at, probably a lot like you. So the company that I've been working with for many years that does all of my LLC stuff, they do all of our business funding, they do taxes and tax prep, and they even do estate planning at a very high level, is a company called Prime. And all you have to do is go to www.talktoprime.com to find out more information. And again, they funded like $4 million last month alone in business funding for entrepreneurs just like you. And again, they'll help you set up an LLC. They'll do all kinds of really cool creative stuff if you're an entrepreneur or you're a business owner. And I figured you'd probably find it valuable. So again, all you gotta do, go to www.talktoprime.com to find out more information. Now let's just go ahead and get back to the tour.
The way that you just broke that down is beautiful. And here's why. You were great at the front end stuff because you liked it. You enjoyed it. You're good at it. You're not bad at the back end stuff. You just don't want to do it. And I think that entrepreneurship in general, a lot of people make that mistake where they try and do a little bit of everything. Hire the professional. Have a great attorney. Have a great CPA. Work with a company that you can reach out to, ask a question, and focus on what you want to do. A lot of times people will ask us, we have a full team of bookkeepers, when should I do the bookkeeping? When is your time more valuable? And I think that probably what separates you from a lot of entrepreneurs with the success that you've had is you made that decision early that you were going to focus on what you were good at and what you enjoyed. And then you're able to go hire out a media team and a CPA and an attorney and all these areas that aren't as exciting for you. That keeps you more motivated. That makes you want to get out of bed at night or bed in the morning.
Yep.
And it really allows you to grow and scale at a pace where I think people get stuck in the weeds and overthink. One of my favorite books. Have you read Rocket Fuel by Gino Wickman?
Yeah, and the other one that he wrote too. Traction.
Yeah, with the L10. We do that throughout our entire organization, and that's been another area that's really helped. But you and Steve Harward, visionaries. You can go make money out of thin air. I am not that way. I don't have that ability to look 5 years into the future like you and Steve do. It's a superpower. But what I am willing to do is put in the time, put in the work. And for any of you that relate more to me as an integrator than to Austin and Steve as a visionary, you're probably going to overthink some things. And you will be the one that holds on to things longer. And I would recommend that you take a step back and ask yourself, what do you truly want to do? What are you great at? And how can you go make more money to hire out other areas?
Yeah, I love that. You have to recognize and be self-aware of your personality type, right? There were many years where I tried to be an integrator and I hated my life, and to this day, I get dragged into crap that I really don't want to be dragged into, like with all the different companies and moving pieces that we're doing, right? And like, I'll find myself, doing a task or in a meeting or something that I just don't care to be doing or in, right? And I'm like, and I'll kind of like have that aha moment, and then I'll tell somebody like Alex or one of my other partners, I'm like, dude, you got to get me out of this. Like, you got to take it over. I got to delegate this off because if I keep doing this, like I'm going to freaking hate my life, right? Yep. And I didn't get into entrepreneurship to hate my life. You know, I mean, sure, I'm down to work hard and do all of those things, but I don't want to hate it, right? So I love that you talk about all that and you explain it very, very well. And what you have is a superpower too, though. I know you said what I have is a superpower, but like, I mean, the opposite's also true, right? It's just different. Talk to me a bit. Let's go into the nitty gritty for a minute of like cost seg and, you know, different things like that that maybe people don't even know about or they just don't understand. Like, let's just start with cost seg. What do you mean by that?
Sure. So if you were to buy a single family house today, usually in traditional accounting, depreciation, what you're going to do is you're going to take that single family home and you're going to divide it over 27 and a half. Whatever the purchase price is, you divide it over 27 and a half years, and you equally take that distribution year over year for depreciating that property. Now, accelerated depreciation or cost segregation studies are an amazing tool for real estate investors. I ran, I believe, 5 cost seg studies last year. I'll probably do another 4 or 5 this year. And all that is, we take that same single family home, we run the cost segregation study on it. Usually it'll cost $2,000, $3,000, kind of depending on the study and the size of the house. But what it does is it breaks everything up. The carpet is not going to last 27 and a half years. The paint, the light fixtures, the cabinets, the street poles. So now you're able to take certain areas and depreciate it over 5 years, 10 years, 15 years to really accelerate and give you a much larger deduction. The beauty of that is when you're taking tax deductions and you're lowering your taxable income, depreciation doesn't count against your income. You've probably had scenarios where you've experienced this. For any entrepreneur, any 1099, here's the blessing and the curse of the income. You go make a ton of money and you're going to pay a ton of money in taxes. If you have a bunch of deductions and lower that overall taxable income, now you may have trouble qualifying when you make plenty of money. So the reason that I love real estate, I love cost segregation studies, I love depreciation on vehicles and homes, is that doesn't count against the overall income. So you pay less money in taxes and you still get to go generate more revenue. So great way to create long-term legacy, create long-term cash flow, save money now, and be able to reinvest into your future.
I'm not even sure that I fully knew that in particular, you know, like, that so just so I can understand, right? When you do depreciation on an asset, right? If I want to go to the bank and buy another property, they're not going to see that I made, like, my income will actually be higher. It won't be that lower amount after the depreciation on paper, my net income.
Correct, because it's an asset. So you've
it.
depreciated an asset, as opposed to if you were to write off this microphone, this TV, everything that you've done here in the studio, that's not going to gain you any value from an asset standpoint. But the property and the vehicle, the depreciation is taken out and will benefit you from an income standpoint. So it's a very, very amazing tool. The other thing, I know we've talked about that. You're a licensed agent.
Yeah.
My wife got her real estate license a couple years ago because I don't qualify for real estate professional status. So if I don't qualify for real estate professional status, I'm going to have a cap on how much I can deduct. But my wife and I, having joint taxes, she gets to take that real estate professional status, and it saves us tens, if not hundreds of thousands of dollars in taxes while creating cash flow for long-term legacy and our 2 little girls. So it's a really cool thing that you can do.
That's super cool. Yeah, elaborate on like what qualifies for a real estate professional. Do you have to is the only way to qualify to be a realtor?
No, it's definitely not only being a realtor. Make sure that you talk to your tax professional so you're on the same page with these things. But 750 hours a year. It's an average of about 15 hours a week.
Okay.
It does have to be your primary income, and you obviously have to be generating some sort of income. But a lot of clients that we work with, if one of the parties works, the husband or the wife, if the other person is solely focusing on the real estate business, it may be favorable for the one person to qualify and the other person not to. But if real estate is your primary focus, you put the primary time into it, there's a very likely chance that you would qualify for that real estate professional status.
Yeah, it's super cool. I'm blown away by that. You know, I mean, I've obviously been a realtor for almost 10 years now. So I've been a real estate agent, and
That's awesome.
I don't, so like for me, just maybe for somebody watching, right? I don't currently produce a lot, meaning like I have a big team that produces a lot, you know, do 500 million this year in production just on the retail side. But like Austin, don't actually go represent people really anymore. So would it be my primary thing? Like, you know, and I'm sure I got to talk to my guy or whatever, but you could be my guy for the sake of the conversation. So how would that work for a guy like me?
It's still everything involved in real estate. Everything that you're doing ties back to real estate in some capacity. So if you're generating income through more of a consulting fashion, then the consulting is not going to be there. But as a broker, as an agent, as a real estate entrepreneur, you would still qualify just based off of the time, energy, and effort that's still getting put into directly the real estate business. Now, we'd have to break down all the different revenue streams that you have and what the primary ones are, but I would be shocked if you didn't qualify based off of the amount of time, energy, effort, and money that you make doing real estate. I'd be shocked.
Everybody's always talking about section, what is it, 179? Is that what it is?
Yep, you got it.
Okay.
Good work.
Talk to me a little bit about that.
Section 179, YouTube University tells you to go buy a G-Wagon or a Range Rover, right? Section 179 is amazing, and it's another area of depreciation. So what this rule says is if you have a vehicle that is designated for your work, is over 6,000 pounds, so a lot of these electric vehicles, trucks, G-Wagons, Range Rovers, because they're over 6,000 pounds, you can depreciate them as work vehicles. So if you were to take, last year was 80%, this year it's 60%, but they're talking about bringing it back to 100% depreciation. And it's an amazing tool. I use 179 every time I purchase a vehicle just because of the depreciation you're able to take. Now, it's not the only way to write off a vehicle. You can also write off the mileage. You can also itemize it and write off car washes and gas and insurance. But vehicles for real estate professionals is an amazing deduction for anyone to take.
When would it make sense to take the 179 versus doing miles or gas and all of that kind of stuff?
Usually it makes more sense if the vehicle's over 6,000 pounds.
Okay. Got it.
If the vehicle qualifies, it is usually in your best interest to take more depreciation now and generate more income as you move forward.
People are really going to like this subject, so I just want to go one layer deeper on it. If you go buy a 6,000 pound car, okay, for somebody watching, they use it for all the criteria you just mentioned, right? They use it for their company, yada, yada, yada. But they finance it or they lease it. How does that work?
Love this. It still applies. We have even had clients that have purchased vehicles in their personal name. Let's call it this year $100,000 vehicle, write off 60% of it. You're at $60,000. Purchased it in their personal name, used it for their business, and still took that as depreciation and deduction. So whether it's leased, whether it's purchased, whether it's financed, your name, LLC name, if it is being used for the business, make sure that you talk to your accountant about that and remind them about Section 179. It's an amazing tool to maximize tax strategy.
Wow. My last question on that subject, why the heck did they create that? Like, you know what I mean? Like, in your opinion, like, why, what was the point of it? Like 6,000 pounds, it seems just like a loophole.
Farmers. So
Okay.
Here's what's really cool about the tax code. You're not going to hear me say that often, but the IRS, the tax code is over 70,000 pages. And that 70,000 pages, you think how long it took to put that together. There's so many weird little tax laws that a lot of people call loopholes. I don't love the term loopholes because they're tax laws. They're there for you to utilize. A lot of people talk negative on Amazon and Apple and Trump for paying $0 in taxes. They're just masters at utilizing that 70,000 pages. So back in the day, 6,000 pounds a lot of times were trucks or tractors, farm equipment. So if you're purchasing those and depreciating it, it was a way to be able to benefit farmers and different businesses that way. Fast forward, Range Rover makes a car that's 6,001 pounds. I remember my dad owned a real estate brokerage and he was like, it's less expensive to buy a Range Rover than it is a Honda Civic anymore.
Yeah.
Because of the depreciation. So there's really funny rules like that. Back in the 1970s, there was a gentleman that lived in Augusta, Georgia. And he would rent his house out when the Masters golf tournament would come into Augusta, Georgia, and he would head out of town. Now, fortunately for all of us, he got audited.
Yep.
So he got it passed all the way through Congress. And now Section 280A says that you could rent out your house up to 14 days a year tax-free. So there's a lot of little things like that. 179, 280,
Wow.
paying your children. It's a matter of, I know that when you first wrote off your vehicle and you saw the value and the benefit, you did that every year. You're
I've wrote off a
strategic
lot
in
of
what
cars.
you purchase.
Yeah, for sure.
So-
Yeah, we've wrote off a lot, and I got to get more in tune with my accountant. I have a phenomenal accountant, phenomenal people who do my stuff, and they're I don't even ask questions anymore. I'm just like handle it, But no, I love the tax code, and I'm not nearly as familiar as you, but at 29 years old, as I continue to scale the companies, I mean, we've definitely taken advantage of it, right? Because I learned the hard way. Like there were a couple of years, 5, 6, 7 years ago, where I made really good money, and I didn't write off as much as I should or could have, and I ended up paying a lot of money to the IRS, and it hurt big time. Like I remember, like literally, I can still feel it to this day, like stroking the big multiple 6-figure checks every year. Like, man, I was just starting out as an entrepreneur, just starting to make a ton of money, right? And that hurts.
Oh yeah.
You don't forget that, right? Like you think about that for years to come of what else you could have bought or invested in or whatever, all because you were in a hurry. You didn't put any energy toward it. I didn't take the time to schedule the meeting with my accountant in time or whatever, right? And I just said, screw it, file it. And then you wind up in a bind.
You can't choose your family. And unfortunately for all of us, the IRS decided that this Uncle Sam character is going to be a silent partner on all of our businesses. So if you can't choose your family, you can't choose whether or not Uncle Sam is a silent member of your business and going to take as much money as possible. The more strategic that you can be throughout the course of the year is going to be the planning portion as opposed to the actual filing. And one of the things that we really encourage our tax clients to do is if you can go monthly, great. But at the very least, January, February, March, quarter one, April, May, June, quarter two, so on and so forth. Going into the fourth quarter, you should know, and I know you do now, but what is your profit and loss? What can you invest into to really lower that tax liability? And that's how you're going to create wealth a whole lot quicker than overpaying in taxes.
100%. Yeah, I hope people like rewind and watch that because I'm telling you, it hurts and you can get way further ahead if you don't have to pay all that money, right?
Yes.
Let's talk a little bit about business funding.
Okay.
Right. So you just said a crazy statistic a minute ago about how much funding you did. I think, what was it, last month? What did you say?
I think last month we did over $4 million in business credit.
That's
Crazy.
wild.
Yeah.
Talk to me about that. Why is that important for an entrepreneur, maybe a startup entrepreneur, maybe somebody who's been in business for a little while and they want to build a set? I don't know. They want to fill in the blank. I mean, they need to invest into their company. I feel like people don't even have an understanding of like where to go or who to talk to get funding. How are you able to help people get that amount of money?
Yeah, I love this. And I always try and tie it back into your personal credit, right? Two of the most weighted variables on your personal credit. Number one, don't miss a payment. Yeah. We know that hurts your credit. Number two, how long have you had an open line of credit? And excellent is over 25 years. Only 16% of America has accomplished a 25-year credit line.
Wow.
So if you imagine it this way, you have your legal name, your social security number, and your credit score, your FICO. Why not do the same thing for your business? Make sure you have a legitimate business name. Let's get you an EIN or an employer identification number, and then build and develop this paydex score or a credit profile that you can use for business credit and corporate funding. I will talk to business owners that have been in business for 10, 20, 30 years. Tommy, why don't I have a Paydex? The difference between personal and business credit is not rocket science. It's a process. You have to apply for it. You have to build it. You have to maintain it. So what we do is we walk clients through how to apply for the DUNS number, how to build this Paydex store through starter accounts like Uline and Granger. And we joke, they're accounts that no one really wants, but it kickstarts your ability to build your credit profile. Now you can go get major credit cards. Now you can get lines of credit. Really cool story that I'll share with you. About 8 months ago now, I had an opportunity to buy 7.5 acres and 2 mobile homes in Missouri.
Okay.
And if I closed on this deal, I would have been looking at about 8% as an investment property. I said, forget that. I've got a line of credit on my business at 4%. So I use business credit. I will let the business pay for itself. I will still take those deductions on the 4%, but I now have a 4% spread that will create more cash flow long-term. So I don't know what business credit will help you with, but I promise it'll help at some point, whether it's a studio or anything else.
How complicated is it? I mean, when we look at personal credit, there's 7 or 8 factors. You've got payment history, to your point, credit card usage, length of time, total utilization, derogatory marks. I forget the others, but you get the point. So how many are there, or is there a number like that with the business stuff, or no?
So usually what we do is we'll walk people through a 7-step process. And the first step is what I talked about a little bit earlier, just becoming fundable, showing yourself and showing that you are bankable to any sort of a lender. Banks are businesses, right? And if you put yourself in the shoes of an actual CEO of a bank, they want to do business with legitimate businesses. Most businesses make more money than people. So a lot of my business lines of credit are much larger than my personal lines of credit. So do you have a good business name? Do you have a bank account? Once you go through tier 1, 2, and 3 funding, now you have the ability to build much larger lines of credit. So it's not difficult. It's not rocket science. It really is just a process. And to under-promise and over-deliver, it does take time. You're not going to build a phenomenal credit score overnight. It's just not going to happen. But if you have accounts that will report monthly as opposed to quarterly or annually, now you can expedite that process. But in a year, 2 years, 5 years, 10 years, what can you use this for to create more wealth? I have never met an entrepreneur that says, I wish I had less money.
No, never.
Because it's easier to scale, it's easier to grow, and it's easier to help more people.
For sure. Talk to me a bit about transitioning to the LLC stuff, right? Let's go to the just very basics here for a minute, right? In your opinion, why should anybody looking to wholesale, flip, buy rentals, start any other variation of a potential company want to do it under an LLC as opposed to their personal name, in your opinion?
Yeah, I love this question. So there's no tax code that says you have to be good at business. No one would be in business. It's hard. There's always pitfalls. There's always challenges, right? But there is a tax code that says as long as you show the intent, you can take business-related deductions. So if you want to treat something like a hobby, it's going to cost you money like a hobby. Treat it like a business. Reap the rewards of what businesses have to offer. And I think that anytime you have the intention to generate income, even if you haven't started yet, if you have a solid foundation, if you set your business up with the thought in mind of it's not if I get sued, but when I get sued, now you're able to remove that as a concern, utilize the tax deductions, profit or loss, and give yourself the credibility. You didn't go into your first deal saying, hey, it's Austin.
Yeah.
You were the president. You were the CEO of the company that you were representing, which a lot of times builds credibility, builds confidence. Everyone has a little bit of this imposter syndrome, and I don't know that it ever goes away. There's always someone that's more successful. But if you can legitimize yourself and you can set yourself up properly, why not maximize on the deductions and give yourself that foundation to really grow long term.
Yeah, it's so powerful, and all the tax benefits, right? I mean, if you can't do the same thing under your personal name that you can if you have an LLC, right?
Correct.
At the end of the day, and I mean, man, I don't even know. I'm gonna start telling like my community, like, look, and I've always told them, I'm like, I used to tell them you could do a deal without an LLC, but I always recommended they really didn't, right? I'm like, look, I really highly recommend you don't do that, because if the deal goes south or whatever it might be, like, what, like, you're better off just having an LLC, right? And then I tell people too, at the end of the day, right, like, if you intend on actually being successful, then just start out the right way. Like,
100%.
It's like, why are you not doing it is the better question. Like, are you 1 foot in, 1 foot out of what you're about to be doing, And so I think that the step number one should be, get an LLC. And we'll link everything down below if people want to talk to you and get an LLC, by the way. So, and then what was the fourth service that you said? So we talked about LLCs, funding, taxes, tax prep, accounting, stuff like that. What was the fourth?
Estate planning.
Estate planning. Talk to me a little bit about that.
Trust, wills, living wills, power of attorneys. And getting into estate planning, I know that a lot of what we do is not overly exciting. And I think estate planning is one of those areas where a lot of times, especially being younger, it's something that you think, I don't need this now, right?
Yep.
Anyone that owns real estate, anyone that owns assets should have a trust or a will in place. And the reason that I say that is because there's enough emotional damage when someone passes that a lot of times the financial piece is what breaks families apart. Once you have an estate plan in place, you can go in and update it every 3 years, 5 years, 10 years. Personally, I didn't set up my estate plan until my daughter was born about 3.5 years ago.
Yeah.
It was the first time I said, I've worked really hard and I want to make sure that the state I'm living in doesn't go and take a lot of the money that I've worked so hard for. I want it to go to my girls. I want to make sure that if something happens to me, my wife has access to all my accounts. Think how many credit cards, car loans, retirement accounts, bank accounts, so many things that a lot of your family members don't even know how to access or where to go.
Yeah.
Cryptocurrency accounts. There's also NFTs. I've got these ridiculous NFTs that I've lost a bunch of money on, right? I don't know if my wife will even want those, but they're there, honey.
Right.
So there's a lot of really cool things that once you have those in place, you're able to check it off your list. And one of our clients that actually lives here in Arizona, he said, I think the binder that you guys got me for that estate plan is the most important book in the house.
Wow.
Because my wife knows where it is. She knows how to operate the properties. He's got 20, 30 Airbnbs. There's a lot of information that even if you're just getting started, you own one property, the goal is to avoid probate, right? And if you can protect your assets, I think it's one more peace of mind process where it says everything's right here.
That's really powerful. I don't have anything like that yet. I probably should get something like that.
We got you. I know a guy.
Yeah, for sure. Well, I'm going to use you guys, no question about it. At 29, well, to your point, right? It's just not something that you think about. People don't think about it. And unfortunately, life happens and you never know, right? And we're not promised tomorrow. And you want to make sure that your people that you love are taken care of, right? And I completely agree with that. And a lot of entrepreneurs work extremely hard just to get everything, taken from them, like to your point, by the state. I mean, it's just not something that you want to run the risk of doing, right?
It's not the most exciting Thanksgiving and Christmas dinners.
Yeah.
But ask your loved ones as well, right? Do your parents, do your grandparents, do your aunts and uncles and everyone else have these instruments in place? Because I've seen it so many times where when someone passes, people are fighting over a couple of bucks.
They are, yeah.
And if you can avoid any of that, the emotional damage is not worth it. Now, at 29 years old, it's not all about whether or not tomorrow is guaranteed. We would make sure that when we do your estate plan, let's do that for you, that we're going to use that more as a roadmap. So now you have access to all your different companies, and whether you're sharing that with your accountant, whether you're helping yourself understand what you have currently, let's use it as a roadmap or a blueprint on as you build and as you grow, you're able to just add that into your total legacy play. So it's not only for the death benefit, but for organizational purposes as well. it's an amazing tool to have in place.
Yeah, no, truly phenomenal. I want to, transition a little bit back into just, building Prime and doing all of that. And I know that it's 11:07, so we'll keep rolling for a little while. I told my videographer, I'm like, I need a clock. We just, for anybody watching, this is the second podcast in the new studio. So like the video if you're enjoying the new set. I greatly appreciate it. In building the company, right, and getting the company to the point that you're at, talk to me a little bit. I always like to spend the last 15, 20 minutes talking a little bit about, personally, right? Because I think it's so important. It's so valuable, to people. I've interviewed 150 people, and almost everybody I've interviewed, they've struggled in one way, shape, or form, right? Physically, mentally, spiritually, emotionally, relationally, whatever it might be, financially. You're married. You have two daughters?
Two little girls.
Two little girls. Congratulations on all of that. And, what was that like, building a company to 300 employees while being married, and how did that look and feel? And what were some of the things that you encountered during that?
It's not easy. It is not easy. The one thing that I will say to that is I don't believe that balance is realistic at this point in my life. And I say that because how do you have this much care? How do you put in this much time? How do you put in this much energy without having that much care, right? And what I mean by balance, and what I'm very, very, very fortunate of, I have an extremely amazing, supportive wife. And if it isn't for my wife, there is no possible way we are here together today where we are. My wife's father was an entrepreneur and owned a trucking company. And she saw the hours and the time and the commitment that he put in. And I think that who you choose as your partner is more important than anything that anyone will tell you around any sort of balance. Because in my personal opinion, balance is not a reality.
Yeah.
I'm here in Arizona for 4 days. My wife is back at home getting yelled at by my 3.5-year-old, 9-month-old's crying, wanting another bottle. And she's got the hardest job this weekend. I get to come hang out with you and a bunch of cool people. But when I get home, she's going to say, how was it? Did you accomplish what you wanted to accomplish? Good work. Thank you. And that teamwork is more important than anything else I could tell you. It's a shout out to my wife more than it is anything that I've done, because it's not possible without her.
It's so powerful. I completely agree with everything you said. You actually met my fiance a little while ago. She's my creative director as well. So we work together, hand in hand every day. And we have very different roles within the company. So there are days that we don't talk that much, right? Or hardly at all. Although we're in the same building all day long, right? And I can't imagine not having somebody on the same page, right? Now, did you just get lucky, in your opinion? Or was it like with her, right? Like, I mean, for people watching, who should they be looking for when they're going out? We got a lot of single guys, single girls probably watching, right? Young entrepreneurs. That's kind of what I've seen over the years. There's a lot of young people that want to eventually make a lot of money, right? How do they find the right person that isn't going to completely screw up their goals and their dreams and hold them back?
I got super lucky. That's a lot of it. Yeah. Anything success comes with a lot of luck, right? But a lot of the things that we wanted in the future aligned very early. A lot of people, even a lot of people that are younger in our company right now, and I'm still younger myself. I'm 34. I've got two little kids. But for those of you watching that are in your 20s, be honest with yourself on whether or not you want kids. I've got some of the people that are like, I don't know if I want kids. And do you want kids or not? Because in my opinion, those are the greatest gifts that I've been given as my two little girls. And we knew very early, my wife and I have been together 10 years, actually, been married for 5. Thank you. Yeah. And we knew, first conversation, you want kids? Yes. Do you want kids? Yes.
Yep.
What type of life do you truly want to live? And know that if you want to be able to take vacations, if you want the financial freedom, if you want your kids to have whatever you want, kids are expensive.
Yeah.
Life is expensive. So if you want to be able,
now more than ever.
Now more than ever. Yeah. If you want to be able to have the vacations, the kids, that takes money. And money doesn't solve everyone's problems, but it's pretty hard to find someone mad on a jet ski, right? So if you want those things, it is going to take sacrifice. It is going to take a lot of hard work. And there will be signs early. If you work a long day and you come home and you don't have the support, there's going to be signs that I challenge you to have those conversations. Because my wife and I aren't perfect. We fight, we argue just like anyone else. But what my wife is better at than me is having open conversations that says, I don't like that you worked 12 hours 3 days in a row. Is there any way that next week you can pick 2 days to work 8 hours? Hang out with the girls, go to dinner. The compromise piece and the ability to have open communication is more important than anything.
I love that. Yeah, really, really, really powerful stuff. You know, I always love talking about this kind of stuff because I feel like a lot of people don't, right? Yeah. And it's just so powerful. You know, there's not a book. Well, there probably are now, but you know, like when it comes to like, hey, balancing being an entrepreneur and having a family and having like balance, whatever that is, there's not any. But like the attempt of it, right? Like the attempt, because you know, Ed Milet, I love what he says. He says that you have to look at everything that we mentioned a minute ago, financially, relationally, spiritually, emotionally, all that, right? Like kind of like a bucket, if you will. And at any given time, like the scale, each one, it has a scale of 1 to 10, right? So all of those, I think there's like 5 or 6 areas. And you can't be a 10 in all of them at the same time, right? You might be a 5 over here, you know, today, and I'm an 8 over here. Like, it's like, hey, you know, in the month of May, I was really good at my relationship. We went on date night every Friday. We crushed it. We knocked it out of the park, but I really didn't go to the gym that much, like in that month or whatever it might be, right? And it's always, Ed Milet says, you know, you constantly reevaluate. You look at it and you say, okay, where am I coming in at in that area of my life? You know, should I step it up a little bit over there? And if I do step it up a little bit over there, where will I have to take from in order to do that, right? And it's this give and take throughout different seasons of your life, right? And the seasons change. I mean, you're in a different season now, correct me if I'm wrong, than you were in 2013.
Oh my gosh, yeah, 2013, it was 6-7 days a week work.
Yeah.
That's it, right? And to your point on balance, I need to get in the gym. I'm fully aware, right? But right now my priority is building and growing the company, getting to spend more time with my girls. Could I make more time to go get in the gym? Of course. There's always time. It's not my priority right now.
Yeah.
And I still get to go play sports with friends. I get to play softball and pickleball and basketball. But my wife's priority is the girls, and I do whatever I can to support that as much as I can. Same way, right? When I get home, I want to try and give her a break and vice versa. But having a team, and it doesn't have to be a wife. It doesn't have to be your husband. It doesn't have to be your partner. It can also be a business partner. What does that look like where you're having someone take something off your plate and focusing on what you're really wanting to do? And I guess going back to how do you know? The fact that your fiance is in here and you guys are grinding and working, like that shows so much motivation. That is a clear as day sign. My wife has been raising these girls and said, I want to do more, went and got a real estate license because I talked about how beneficial it'd be from a tax standpoint. And she just went and did that. So she's the most motivated human being in the world. Raising kids is not easy. Being a mom is extremely challenging. But how do you support each other? How do you complement each other? Not only in marriages and relationships, but business partnerships as well.
Yeah, love it. What does a day look like for you nowadays? I mean, you know, here you are, you're president of a company that, you know, 300 employees and growing, right? You have 600 affiliates, over 600 affiliates. Big names, by the way, names that everybody watching would know, right? That represent Prime, promote Prime, talk about Prime, and believe in it, right?
Yep.
Which is outstanding. You know, you don't see that very often. What does the day look like for you nowadays? I mean, walk me through a day.
The days are, if you were to ask me this question, even 2 years ago, I would have said, oh my gosh, it depends on the day. But right now with where we are currently, going back to the comment earlier, creating systems, processes, procedures, and what we like to call within the organization, people that own it. And if you're owning it, you see it through from A to Z. So right now, a current day, I wake up and I wait to get my little girls ready so that I can spend a little bit of time with my girls in the morning. My wife takes our older one over to school, and then I go get a coffee. I get into the office about 9 o'clock. Now, from 9 o'clock on, I am on Zoom pretty much all day, whether it's webinars, whether it's meetings, whether it's strategic relationships and partnerships. It is not uncommon for me to spend 6 to 10 hours a day on Zoom, but I love it.
Yeah.
And it's great. I love building those relationships. We were on a Zoom call last week. That's a lot of what my day looks like, is going back and forth, presenting to a lot of the communities, doing a lot of presentations around asset protection, tax savings, and asset minimization as a whole. But a lot of it is just spent on Zoom. I do have minimal meetings. We try and keep meetings to a minimum, but there are quite a few of those. Wednesdays, for instance, are my meeting days, where I just try and knock all of them out on Wednesdays so I can stick to creating value, doing more research, helping more people. But a lot of the time, it's not anything sexy. It's Zoom and then back home to let my 3.5-year-old yell at me once I get home.
Yeah. You know, I've said many times on the show that to make a lot of money and to be successful is to live a mundane life.
Yeah.
It's to live a repetitive life. It's to live a life of habits and rituals and things that you do day in and day out. You know, you see a lot of people that make a lot of money and they wear the same shirt every day. Not literally, but like they have 10 of the same shirt.
Yep.
So they don't have to make a decision. It's just, I wear a black t-shirt every day, right? Or I eat the same thing for breakfast every day of my life, right? Yep. And by doing so, you allow space, if you will, in your mind to make big decisions, right? To get on those Zoom calls like you're talking about and provide value to the different communities and different people that you're talking to, right? And I really love that. I want to just touch on one thing real quick, which is like the meeting thing, right? You know, maybe for somebody who's watching who is making a bunch of money, their business is really successful, and I've struggled with it too, so I just want your opinion, you know. You hear the term death by meetings, right? Like, you know, and I'm trying to get out of meetings. I've heard Pace Morby say a bunch, and you know Pace better than I do. Like, I don't do meetings. Like, Pace is like known for that, right?
Yeah.
He's like, I won't do them. I won't go to the office. I'm not doing them, you know? And I've been trying to get out of a lot of meetings because I feel like I'm at that point where, dude, like, I mean, we have, you know, between our agents and staff and wholesale team and all the companies, you know, we have just about 200 people. That's now, awesome. They're not all W-2 because a lot of them are agents and stuff, right? But meetings just wear you down, man.
Yeah.
So how have you been able to navigate out of doing some of the meetings and delegate better over time?
So this is a great question. A lot of it comes down to that book you had mentioned earlier, Traction, with Gino Wickman. So every Wednesday we do a 2-hour L10 meeting. And in these L10 meetings, for anyone that's not familiar, you go over a scoreboard, which basically talks about the previous week's performance. You go over issues. Those are things within the organization that need to be addressed over an executive team. You go over rocks. Rocks are going to be longer term, quarterly things that need to get done. Those are more of the marathons as opposed to the sprints. And if you're able to wrap those things up over 2 hours, what I have found is a 1-hour meeting, there isn't a lot that gets done. So if you can just have 1 2-hour meeting and be able to delegate accordingly based off of those executive decisions, it makes things move a whole lot faster, because we're now at a point within our organization where there's people that are way better than me at implementing these strategies amongst the team. And it's a credit to our team more than anything else. We've got amazing people that take and run with their responsibilities. So being able to say yes or no and just move on decisions as an executive team and trust the team to make the decisions and make the mistakes, it has been an absolute game changer. And I think it really starts with getting rid of 1-hour meetings. And if it's that important, let's include it in that 2-hour meeting so we don't run out of time.
I love that. Yeah. Really, really, really freaking powerful stuff, man. I'm going to have to go back and re-listen to the podcast too. I feel like I got a lot of value. Like 2 more questions, then we'll wrap here. So one question I have for you, which maybe you don't want me to ask, but I'm going to ask anyways, is, correct me if I'm wrong, does Steve own a jet, or do you guys own a jet, or does he own a jet, or does the company own a jet?
Yep. Primarily Steve. It's two now.
Okay.
At this point. But the jet's another 179 type.
That's where I was headed. Yep.
Amazing deduction, right?
Talk to me about the write-off. Yeah.
You're able to take the full amount of the purchase price of the jet and depreciate it and write it off against the company income as a whole. So we were talking about it on the way over. Not as cool financially. It was supposed to cash flow much greater than it was, but we've created amazing memories, unreal experiences, brought a lot of relationships and partnerships closer together. And to receive that big of a tax benefit, was it a regret? No. Was it a win? I would say, just from the memories alone. There's a really funny picture. I'll have to get it over to you for the video of, we went to Nashville and I got this cowboy hat with this fake mullet coming out the back. And my sister sends it to me all the time and jokes about it. But we've created so many really cool memories and so many awesome experiences. But it all started with a tax play.
Yeah.
And if that's what it was for, it absolutely checked the box. It's an amazing deduction.
I love it. I have to ask, what kind of jets?
I don't know what they are. That's a Steve question. I just get on them and go to wherever we're going.
I love it. I love it. No, you hear the famous Grant Cardone jet story, right? And if you heard him talk about that, in December or whatever it was, he's like, I need a big old write off, and he called Gulfstream and got them to, give him the plane, and makes sense. Like to your point, right? Just like section. So is it literally the same section that allows you to do that, or is it a different part of the code?
I'm not 100%. I'd have to look and see, but it is the same principle. It's the same depreciation. I don't think that it's 179, but I could be wrong about that. It is a vehicle, so
sure.
I'd have to double check. And Steve Harward, he decided to do the same thing. It was in the month of December where that was purchased, and that's where I tell a lot of people. There's a lot of real estate people that think that the end of the year slows down, and that's not the case. A lot of very wealthy individuals end up purchasing real estate in the month of October, November, December, because that's where they get the depreciation. I don't know about last year, but previous years, a lot of times transactions are highest in the month of December because of investment properties. I currently own 78 doors of real estate, and 62 of them were purchased in the month of December for tax write-offs and depreciation. So it all comes back to planning. If you're not planning throughout the course of the year and you don't know what your profit and loss is, I promise you're leaving money on the table. And so the sooner that you can have someone that helps you proactively benefit on your overall tax picture, the easier it's going to be to grow and scale long term.
Sure. Wow. Yeah, so powerful. Do you have mostly single family or multifamily?
60 of those doors are in a multifamily. 8 of the doors or 12 of the doors are going to be duplexes. So most of them are multifamily, but there's currently 8 or 9 that are single family.
And you personally have that portfolio, you and your wife?
Correct.
I love that. Yeah, very awesome. Cool. And what's the goal with that? 1,000 doors, or just continue to buy them as you see fit to build the empire / save money in taxes, etc.
The goal is to keep more money in our corner. My baby is Prime Corporate Services. So real estate has been an amazing tool to create cash flow to save money in taxes. I do not have a real estate goal more than I do to save money in taxes, to keep more money in my family's portfolio. 78 doors is more doors than I want, honestly, but it's a great way to save money in taxes. And I know that number is going to grow this year. We bought another property a month ago, so it's going to continue to grow just based off tax savings.
I love it. Okay, last question for you. In your opinion, I ask everybody, every real estate person, I feel like you're closely enough in the real estate world, right, where you can have an opinion on it. What do you think about the market, and what do you think, in your opinion, because nobody's got a crystal ball, right? 2025, 2026, 2027, what should people be thinking about? What should they be doing, in your opinion?
This is awesome. And my answer is probably going to be much different because of all the tax that I deal with on a day-to-day basis. My recommendation would be zoom out. If you zoom out, it's up and to the right historically. Every single person, myself included, has complained about interest rates that's watching this show. I guarantee it, right? I just barely a month ago closed on a house that was 7.5% as a rate. Do you think I'm happy about that? No, I'm not happy about that. But how can we spend so much time talking about interest rates, but such few time talking about how much we could save on a percentage of our taxes? So my challenge to everybody watching this is zoom out. And if you can save 5, 10, 15, 20% on your taxes even if you're at a 7-8% on those interest rates, at what point will you be able to refinance and now be able to cash flow? I don't think over leveraging yourself is ever a good idea. But I think that based off of the strategies that you teach, the knowledge that you have, being able to diversify your portfolio, now is an amazing time to be able to do that. If you're going to care and complain about interest rates, start talking more about your tax percentages and understand that if you zoom out, you're bettering your situation long term.
Truly incredible advice. Where do people find you, Tommy? How do they get a hold of you if they want to work with you, whatever? And again, I'll have all of our links and stuff down below for people to actually come, use Prime. But you personally, how do they get a hold of you if they want to?
So everything is funneled back to Prime Corporate Services. Okay. I am on Instagram as Tom Thornburg, but Prime Corporate Services is the baby.
Cool.
And Prime Corporate Services on Instagram, Facebook. Check it out. We try and do a tax tip of the week to keep you thinking about taxes throughout the course of the year. And then I know that we've also put a link together for anyone that wants to speak with us and have a free consultation. Make sure that you let us know that you're coming through from Austin. I believe it's startwithprime.com. And that's for a free 1 hour, 45-minute to hour consultation to speak with our advisors, talk about where you are currently and what your goals are long term.
I appreciate you for being here, Tommy.
Thank you for having me.
You're the man. I know you're a busy guy, so thank you for making the time.
Thank you.
And I'll link all of your information down below. We'll link the startwithprime.com link down below as well. So if you're still watching to the very end, I greatly appreciate it. Make sure if you haven't already, like the video, comment down below, let me know what you liked, and leave a 5-star review. It would mean the world to us and help us bring on more amazing people like Tommy. Thank you again. We'll see you in the next one.